Welcome to everyone today for joining us for the CEO Roundtable on the future of financial services, our last virtual panel before the summer break. The CEO Roundtable, in some ways, is a sort of result of some of the work that we've been conducting with members of each of the respective CEOs organizations around our fintech task forces, which we launched in January 2020, that are looking at the broader perspectives within the industry. And we're very pleased to have the CEOs here today to discuss some of these pain points in person. Just as a little summary, we've had about 40 virtual panels over the past 4 months during this COVID confinement phase, with over 4,000 participants attending from all over the world. And today we are incredibly honored to welcome 3 exceptional executives from the Luxembourg community. Gentlemen, thank you very much for being part of this. I'm going to give a brief overview and introduction to all of you, and then we can get going. So first and foremost, we have Arnaud Jaquemin, CEO of SocGen Group Luxembourg Group. Arnaud Jaquemin joined Société Générale Group in 1993 and became Deputy Chief Risk Officer of its risk division in 2012. He was appointed Group Deputy General Secretary in 2015, notably heading the transformation of the Compliance Division, and then Deputy Head of Group Compliance in 2017. In June 2018, he became Group Country Head for Luxembourg and CEO of Société Générale Luxembourg, which conducts all group businesses in Luxembourg. Welcome, Arnaud. Next, we have Robert van Kerkhoff, Managing Director of BNP Paribas Security Services, covering Luxembourg, Ireland, and the Channel Islands. Robert started his career in Fortis Bank as Head of Risk Management for the brokerage, custody, and clearing activities in the Netherlands, and became CEO of Fortis Bank in Spain. In 2013, he became Deputy Head of Assets and Fund Service Operations based in Paris, building and managing the global operational model and AFS management support. As of March 2019, Robert has been appointed Head of the Netherlands, Nordics, and Luxembourg at BNP Paribas Security Services. And finally, last but not least, Eduardo Gramuglia, who is the Country Head of State Street Luxembourg. Eduardo is Senior Vice President and Country Head of State Street in Luxembourg and responsible for business strategy and governance. Prior to his current role, he was responsible for business development, relationship management, client onboarding, and change. Eduardo is an active member of the Association of the Luxembourg Fund Industry, ALFI, and contributes to the work of several working groups. Gentlemen, thank you very much for being here with us today. We really appreciate your time to be able to share with our community your perspectives on the future of financial services, in many respects related to the unprecedented situation that we've been facing over these past few months. And I think to me, that's probably a great starting point is COVID-19. COVID-19 has initiated significant and unparalleled responses from all organizations within financial services, yours included. I mean, if I could take you back maybe to sort of March when you know the build-up of the confinement phase and the COVID cases began, and you were faced with a situation where you had to send your people home. You had to change the way your business is operated in Luxembourg and shift your operations to a different model. What were you thinking? How did you manage that? And how surprised or pleased were you with the speed and agility with which all of your organizations coped? Maybe let's kick off. I look at the screen and I see Robert first on my left there. So Robert, I'd love to hear, how did you manage this?
Yeah, no, well, first of all, thank you very much. Thank you very much for inviting BNP Paribas, and I representing BNP Paribas. So I think, you know, when this whole, let's say, situation started, I actually was in Madrid. I'm currently also in Madrid. Does not mean that I'm always in Madrid, but it's a coincidence. And I was, at that moment, I was actually thinking what to do, because I had a flight booked the week after, going back to Luxembourg. We saw that a lot of the airlines were stopping flying, and also lockdowns you saw everywhere. So I needed to take the decision, or I stay with my family in Madrid, or, you know, I was going back to Luxembourg. So I decided to stay after talking also with my management team. And you, at that moment, you know, you're looking around, and you see that somehow people are doing incredible stuff. And at that time, you know, I think, you know, I start with the feeling that with these people, you know, we are able to do anything. And I think this rock solid kind of trust, you know, when you work with a team and you see that things are going the right way and that you can count on each other, the team working, I think, was very, very clear. So the starting point for us, and we had the conviction, is that when we are in this kind of situation and we work as a team, you know, we are really able to do things in the way we did. And I'm sure that a lot of, you know, also my partners in the panel, they will tell the same story. I think that is one. So that cohesion, that collective way of working. Secondly, I think what we saw was indeed agility, because you need to understand that, you know, this big we are a big company. There's a lot of governance in place. Sometimes it's bureaucratic, you know, sometimes it delays also the, let's say, the reaction of the organization, of all the stakeholders that are there. And in this period, actually, you know, we became a flat organization. And sometimes I'm making the, let's say, the comparison with the fintech, right? So we became a little bit of a fintech organization. And I think that is that agility. I think we of course we want to maintain as well, you know, in this after the post COVID. And then the third one I saw also was the intimacy between the people. So we were, let's say, within the organization, people were, because we had only one, let's say, one direction, which was the direction of making sure that people are safe and that our organization and our, let's say, the people were quickly going out of the organization. And secondly, I think also with our clients, we saw that, you know, a very simple question like, how are you doing? Can we help you? And I think this is what was really, you know, in this tough period, kind of embraced by our clients. So the intimacy, I think, was the third component what I saw.
Okay, thank you very much for that, Robert. Eduardo, I mean, how did the situation impact you guys? How did you sort of motor to make things happen?
Yeah, so a lot of the story is the same, but I say from our perspective, given our footprint, we have a large presence in China, and when this virus started to outbreak and increase there, we had already to take actions there. So for us, let's say that starting point, and then the evolution of the virus as it was making its way east, was a lot of learning. So in preparation, we were revising our BCP plans, we were testing access, etc., etc. By the time, let's say, the virus hit EMEA, Europe, our Italian colleagues had to go home. It became very quickly apparent that BCP was being rewritten, that thinking about going into a disaster recovery was not a solution. And so at that point, we just took a very pragmatic approach. There was a lot of red tape in State Street, as there is in other large organizations. All of that was put to the side for a second. Health and the safety of our employees was the first consideration. And so from one day to the next, in the space of a week, we went into from 0 to 98% work from home, which for an organization such as this is quite surprising, let's say. But we did it. Lots of engagement from employees. We started to institute weekly calls where employees could ask any questions they want. There was a lot of uncertainty around what's going to happen with my taxes, what's going to happen with my parking, what's going to, you know. And so we had to engage very actively and very frequently with our staff. And what we found as a result of that, which was very exciting for me and very energizing, is that now we have a level of engagement with our people which probably we hadn't had before. And likewise with our clients. I mean, during the time of the virus and having to marry work from home or a transition to work from home, not just here, but across the globe, for our clients as well with market volatility. That meant that we had to, significant volatility, we had to stay very close to our clients, constant dialogue and engagement with them, because yeah, it was a question of finding quick, pragmatic solutions to the problems that were presented from one minute to the next. It was, yeah, I think all in all, the experience has been very within the tragedy that coronavirus has been, because let's not mistake, it has been a very tragic episode for all of us. We have found some positive, let's say, things out of this experience.
Thank you, Eduardo. And Arno, how was things? How did you manage things with SocGen?
A lot of things have been said by Robert and Eduardo. A few elements on my side. I was not surprised by one thing and surprised by other things. An element on which there was no particular surprise was the technological aspects, because we had already for a few years actually equipped 100% of our employees with laptops and deployed virtual workspaces, VDIs, systematically. And so the challenge was really to actually to open, the routes and to increase the number of accesses in a short period of time. What was frankly surprising to me and to the ExCo is the collective agility, as said by Eduardo and Robert, the collective agility of the ExCo and of the teams, frankly, to put in place the new way of working, to bypass the rules, the written rules. And one of the key decisions, frankly, of our group was, of course, to put this, this control tower of the situation with our colleagues from Asia, etc., already very early on at the beginning of the year, enabling all countries to actually take quick steps, but also the decision from the management, collective decision of the management to actually decide that the crisis would be handled locally by the local management and the local teams, beyond the management, local teams. And that proved to be effectively remarkably efficient. In less than 2 weeks, post the decision by the Luxembourg to confine, we were able to have virtually 100% of the staff working from home. The exceptions were the people that were on vacation, etc., etc. But we had, 95% in less than 2 weeks of people working from home. Very impressive. The quality of internal dialogue was actually quite good. The quality of dialogue with the clients proved to be quite good as well. And frankly, this was not obvious because the situation was completely, that was a crisis situation, with deleveraging exercises, with, gathering information for calculation of the net asset values in our banking, in our security services business. That gathering informations very late at night, even in the morning, etc., but no significant operational losses. So quite impressive.
So Arno, if I could just follow up on that then. As you've all said, and to me, one of the most impressive things, really, be it throughout all this, the problems and the crisis of COVID, is really how fast the agility, as you say, that the institutions had in terms of reacting and on a massive scale, switching over operations without any planning. There was no precedent for this, as Eduardo said, no business continuity plan for this current situation.
Not to this extent, yeah.
Exactly.
Certainly not.
And everything, as you said, 1-2 weeks, boom, everything was done. What do you take from that? Is this something that I'm certain you were very impressed with this, and does this excite you in terms of your business developing over the coming years, and when you look at your strategy for the foreseeable future?
Yeah, definitely. This is one of the the lessons of this crisis is that even mature organizations such as ours are able of being similar to fintechs.
Or to Google. Look at it. You guys behave like Google, all of you. I mean, think about that.
Right. That's exactly right. We do not even wear ties,
Yeah, I'm the one wearing the tie. Yeah, exactly.
That's situation front renversé, as we say in French. What is highly positive is the fact that our organizations were able to prove their agility, and we have conducted with the ExCo, with the teams, actually an ex post session in order to see what we could draw from this experience, in order to make sure that we would keep this ability of being very agile, very cohesive. When we had to prioritize the ramp up of the opening of the access, because at that time, frankly, we were not sure that technologically the number of connections would be sustainable. For instance, we had to try this. There was no war between the ExCo members for the prioritization, etc. It was remarkably done. So we have to draw lessons from this in order to make sure that we re-inject this agility on a permanent basis. And I'm very positive about that, because we are able. And it's true that often, and many thanks, frankly, for giving us this opportunity, Nasir, to explain how we experience this on a real time basis. Our organizations are mature, but we are able, we proved it, to be extremely efficient in a completely unplanned situation.
Yeah. Robert, I mean, I think this is incredibly exciting for the industry as a whole and for your organizations, because, I mean, quite honestly, over the past 10 years since the financial crisis, with increasing regulation and constraints on the industry as a whole, European banking, from a KPI perspective, has been hit hard in relative to other industries. I mean, Luxembourg is still doing well, but performance overall in Europe is getting hard, right? This agility, I mean, what is it making you think, sort of, as to the changes that may come in the coming months and years around your business model and your competitiveness?
Yeah. Okay, it's a good question, Nasir. So I think what we see now, and what we also foresee, is that this period, this difficult period we're in, is not over. I mean, if we look into the newspapers now, here also in Spain, but also Luxembourg, we see still cases that unfortunately they are growing again. So we will remain in a very uncertain period, and that will also imply that we will see consolidation in the sector. Universal banks will concentrate more. So I think that is something that for sure we're going to see. We also we will see that there is more pressure on the cost base. I'm sure that my colleagues in this panel, they all receive their guidelines from head office already. So we are, and also our clients, everybody's looking at how can we look at our target operating model in a way. Is that still, do I still need to do these kind of things? Do I still need to, from a data perspective, we all face there, I think, also challenges. Do we still need, that data cleansing, data normalization, standardization, do we need to do that in-house, or are we going to outsource? So I definitely see also for our business an opportunity there to help our clients also to find ways to become more efficient in the future. So I think these for me are let's say two important, and then there's perhaps also a third one, and that's the geopolitical aspect. So we also see there are dynamics in the world that are changing, that are somehow questioning, I think, also let's say some principles that we always took for granted. I think now it's more important than ever to look for your right partner, in this whole dynamic world. I think these are, for me, three things that I see that are changing, and there we need to be, let's say, with our clients, with the market, to make sure that we help them and support them.
I think those are good points. Eduardo, I mean, I'm keen to hear your opinion on this, because there was something that stuck with me very closely since our last board meeting, where we had a similar discussion amongst the RXCO, where you said something very interesting, and I'd like you maybe to expand on that. You said one of your main concerns is that, you know, there's been, to some degree, this ramp up of efficiency and openness of potential now around digital and efficiency. But one of your fears is that the industry reverts to norm, as it has done in the past.
Yeah, you know, during the last crisis, the global financial crisis, now it seems decades ago, it's just one. But I was sitting in a board, and the chairman of the board said, well, this soon will be over. The historical memory of the financial industry is 12 to 18 months. I think that has even accelerated, where we can say the historical memory of the financial industry is now 6 to 12. So my fear is, as we go back to the office, that people revert to old habits. And I'm not going to use adjectives on those habits. It's the way we were used to. But I think what COVID has demonstrated, what this crisis has demonstrated, is that we can do things differently. That when push comes to shove, we have it in us to go back, everybody working from home in a matter of weeks. Where people in the past used to say, ooh, working from home, no, I like to be in the office because I have my, and now we're trying to bring them back into the office, and I think that's positive, but I think that we need to be careful that when we get back into the office, whatever that office is going to look like, that we don't start or continue thinking, oh, well, you know, I used to do it this way, it worked, so let's go back to that. No. Now is the time to, we've been given the opportunity. We've been given this opportunity of seeing things differently and realizing how much we can achieve when we're really pushed. I think even one thing we haven't spoken about is the regulator. The regulator was very pragmatic during this whole crisis. We were able to deploy certain technology and certain methods of communication and do without the fax, for example.
Yes, can we just eradicate faxes? Do we all agree on this, right?
Yeah. And now the regulator has said, they said it at the AGM, at the IBBL, we were fearful of doing these changes, but now we've seen that a lot of those fears that we had might not have been well founded. And we're going to see a new circular this month. I'm really looking forward to it. But again, if we can do that and capitalize on that, then we won't fall into the habit of crisis has ended, something good came out of it, let's forget it, let's go back to the old. No.
Personally, I'm optimistic, Robert, because frankly, what we were collectively able to achieve was the result of all the preparation that our institutions, all the transformation that had undergone in our institutions in terms of more digitalization, use of the best technologies, etc. Of course, the transformation, the progress is always slower than what we would like. It was also the technological aspects helped us to test this in a real manner. But I think the train will continue to roll. And yes, this crisis, A, is a proof that we are able to do it. B, will be an accelerator for sure, because it probably has changed the mindset of many employees and managers. But it's also what we were able to achieve was the result of all the transformation work that had been going on for years, and even sometimes a decade. So personally, I'm optimistic. I'm optimistic because I believe that this will be an acceleration and the risk of falling back to old habits, etc., is yes, of course, is there. It needs to be monitored. But look at the trends. I mean, we happen not to have any retail operations here in Luxembourg, but at group level, we definitely have it in many countries. Digital banking is something that becomes more and more obvious for our clients. It's something which is not new. I mean, at SG, for example, in France, the pure digital bank is something that exists, that has started in the mid of the 2000 decade, and Boursorama, owned by SG, is something that is well functioning and continuing to develop. That was actually created in the middle of this decade. So, I mean, our organizations are able to transform. The question is, are we sufficiently constant in our efforts? And do we make sure that all our employees are sufficiently embarked upon this journey?
I think perhaps
that's exactly the point. Sorry.
Yeah. Yeah, no, thanks, Eduardo. Now, perhaps because I think that we didn't touch base on one. I think that's important as well to mention, because if you look at the last crisis, you know, the banks were seen a little bit as, let's say, the ones that have caused the crisis, and there was quite a negative also perception, you know, around the public towards banking. I think in this crisis, I think we have shown that we have and we can have, you know, an impact on society. So if we look, you know, for example, in Spain. Sorry to use the example of Spain, but we have a couple of companies that start recovery funds, and where we are being a player in that whole setup. I think that is important, you know, from an ESG perspective, from a sustainability perspective. I think we all realize, and also during COVID, that, you know, that at the moment when we stop traffic, when airlines at a certain moment stop flying, that this has a direct impact, you know, on our climate. And this is something I think also that the generation and we are all, I think, very concerned about. So I think this is also the moment that we need to keep on going, and we as asset services, I think the positive impact and also the engagement that we can create with our people, I think for me is very clear, and I'm very supportive in that, you know, pushing that forward. So I think this is also a very important element to mention in this particular crisis.
Mm-hmm.
If I may say, I mean, I know all of your organizations relatively well, and know many of the projects that you've been working on, and you've been some of the forerunners in terms of digitalization in Luxembourg and beyond, which is why we asked you specifically to be part of this panel. But without question, if I may say, that undoubtedly, given that this was a surprising situation, and given some of the regulatory constraints around various things, I mean, there must have been, on the subject of digitalization, certain elements of your processes which there were little gaps in there in terms of how you business continuity, right? Now, I mean, the way I look at it is that the first phase was, we need to switch everything over so that it can function. But now, as we go into this phase of this is going to continue now probably for 9 to 12 months, that's the way I look at it anyway, minimum. And we now need to, you know, the business needs to grow, we need to service and onboard new clients, etc. If I may ask, I mean, what are some of those areas, immediate things that you're looking at from a digital perspective, e-signatures, KYC, etc., where you think we need to really address this now, and it has become a priority? Maybe Robert, seeing as you were speaking, are there any specific areas where you said, right, we need something here, we help this problem?
I mean, of course, no. If I'm now going to say that we are the perfect organization and we have everything without any gaps, that would be a little bit, I think, silly. No, I think we of course, we have a lot of challenges ahead of us, and I think if you look at digitalization, I think we are investing quite a lot in that, and I think what is important, how I see, you know, our current industry, is that we are now much more open than we were before. You know, we had our closed platforms, and clients could, you know, in a kind of modular way, then kind of entering these platforms. I think now what we are trying to do is really to make sure that we have much more open platforms. And I can give you, I think, a great example, and I like that. So I want to at least to address this in this panel today, because I want that people start to look a little bit further than only let's say the banking services. So we started off in 2018 this particular initiative. It's called Climate Seed. And it's it's a great example where we, let's say, together with, it was within the Nobel Prize winner, Professor Yunus, we started off this initiative. It's now a kind of spin-off, so it's autonomous, and where companies can actually buy carbon credits to offset their carbon footprint. And, this is, for me, it has all the elements. So entrepreneurship, technology, the sustainability. So I think really something where we can be proud of, and and this is where I think where at a certain moment the industry is going to. So much more open platforms. So I can give you a lot of other examples. And I think this is where we want to invest more in, and to make sure that we have the right, let's say, we look at the technology in the market, and we make sure that we hook that on, let's say, the most optimal way. I think if you are able to do that, this is, I think, where will be the winners of the future. So to make sure that you pick the right technologies and partnership from, let's say, in our business.
Yeah. Eduardo, I mean, were there any particular things where that there was not optimal tools and technologies within the business that you've been looking at addressing?
Well, look, I mean, and it's pre-COVID. COVID, I agree with Arnaud, it has been and will be an accelerator. But we looked at our business, asset servicer, and we're pure asset servicing. We have asset management as well. But let's say that the bulk of our business is asset servicing, and we made an acquisition a couple of years ago of a front office system, and we started integrating the whole value chain of an asset manager or an asset owner, from the front to the back and back to the front. For us, that is the vision, and at the core of that vision is the data. So for us, being able to have just one data, one truth along the whole value chain, that's only reconcile one, and this becomes very flexible in the way you can use that data. Then we'll address a lot of other aspects that are emerging stronger and stronger. Robert mentioned ESG. I completely agree, but ESG will bring with it a complexity in, again, the data that you need to prove that you are ESG, et cetera, et cetera. So that is one aspect of it, and that, as I say, was pre-COVID. It's being accelerated, and it's being a success. Another one we're looking into, a bit different here, is the tokenization, the cryptocurrencies, and some players that we're in discussions with around funds that are being set up in that area, which I know it's dear to you, and which is probably a trend that is starting now. I'd say it's very shy for now, but with a lot of potential. It's finally making something that we've all been speaking about for some time now, something very concrete. So that is another area of focus for us, and that will bring new technology in and of itself, because to believe that you're going to be able to service that type of asset with the old custody system is a bit far-fetched. So yeah, several initiatives and several angles that we're looking at. But even if you think about digital signatures, the way we're doing this webinar now, it's all webinars, but in the past we would get together in a conference room. All this technology existed. We're just using it more. We were forced to use it more. But then if I look at some functions, regulated functions that we have in the bank, we can see how there is existing technology or new technology that we can insert in those. I'm thinking the depository function, and I'm thinking the domiciliary function. So if we want to be specific into the here and now and what can be done.
Yeah. No, and Arno, I mean, following on from that, obviously, I know, and SocGen have been in particular looking at the tokenization element as well. What other things aside from that? And maybe tell us a little bit about the initiative around tokenization you've been working on.
Yeah, I mean, fully in agreement with Eduardo. I mean, browsing from initiatives that were really accelerated during the crisis to longer term trends. Electronic signature. We had deployed this in our private banking business already 1 year ago. It was not very much used, to be frank. And we were able, within a few weeks, to deploy this for our security services business during the crisis because the need was real. So clearly a strong acceleration on that front. Second, I would say example was the dematerialization of our paper-based procedures. A lot had been done before the crisis, but frankly, we finished the work more quickly than what was planned, and for good reasons, of course. Also, of course, acceleration of use of tools, digital tools, enabling us, for instance, to describe, to put in place workflows, etc., etc. So many concrete examples of usage that were accelerated. But I agree with Eduardo, and to address your point, Nasir, and there are, this crisis makes us work, of course, towards an acceleration of an end-to-end digitalization of the way we interact with our clients, with our regulators, etc. And I mentioned before the retail banking space, but this is also true for the wholesale banking space. Initiatives, tokenization initiatives may be extremely powerful, of course, in the long term in the securities services business, which is the trust business, but also, for instance, in the very highly traditional wholesale banking businesses, structured finance businesses, such as the trade finance business, which up to now remain extremely paper-based, letter of credits, etc., exchange of faxes, blah, blah, blah. And we have started at group level 2 initiatives over the past 3 years, which are working well, which are developing, and it's obviously also in the wholesale banking industry the way forward. Other example in this industry, in a very mature market that you know well, Nasir, the DCM business, debt capital markets, and the primary business in particular, where the tokenization, the blockchain opens very interesting horizons for issuing efficiently bonds, okay, and reaching more efficiently a wider range of investors directly, So that's also a revolution that is about to happen. It may take some time, maybe less than, frankly, in the security services, where the investments in the traditional system is so huge that actually I think the transition will take longer. But for instance, in the DCM business, primary business, my personal bet is that it will take place a lot quicker. And so, I mean, at SG, we have, for instance, made an issuance earlier this year. Oh, that was at the end of last year, I'm sorry, of a bond that we actually self-subscribe. But in order to test the system, it works. And now it's the challenge is to actually implement this and convince actually our peers and clients of the efficiency of this. But again, it's I'm enthusiastic because the technology is there. Even more important, we are identifying collectively currently the use cases that will make sense, and regulators are also clearly moving, and I must actually praise the openness of mind of the Luxembourg authorities and the regulator that is actually evolving very quickly. She's not, I mean, Luxembourg is not the only one. Many countries are preparing or have prepared new or adapted their regulations to take this into account. But we have the luxury in Luxembourg to have an agile lawmaker and regulator, which is extremely important in terms of competitiveness on those topics.
No, I agree. I think,
and we know that, Anasia.
Well, I mean, I think one of the beautiful things, I hope you would all agree, which is special about Luxembourg, is how the community comes together and acts in a way, which I think is one of the boons for Luxembourg. Yes.
I got one topic I would like to mention, which is actually a gap. Can I? It's not part of the script, you know that. So probably now you're going to.
These are the best bits, Robert.
You can put me on mute if you want. No, it's a little bit in line with Eduardo's quote, around people, and I want to share that because I think it's important. It's 1 minute. So I received last week, before the panel, I received an email from a colleague of mine working in Portugal, and she was saying, well, great, that BNP Paribas and you're participating to this panel, but are you aware of an initiative that was signed by our COMEX, our Jean-Laurent Bonnefay and his management last year, and was called Jamais Sans Elle. Well, I don't know if I'm pronouncing it very well, Arnaud, but it's
all right. Can you spell L? Sans L. So.
Sans Elle. Okay. And I said no, I was not aware of it. And then she explained it to me. She said, well, it's about when you have a panel, and there are more than 3 men in the panel.
Oh, okay.
And you don't have there also a female participating, then a woman participating, then our board is not participating anymore. I said, okay, that was my first reaction. Okay. And then I was reflecting actually, and in my last panel, it actually occurred the same. We were men. And what really annoyed me a bit was the fact that I didn't really saw it, and I think now for me it's time to reflect a little bit and to rectify. So this one and Sylvia, so I will comply the next time with the same rules. And although we're not in France, we are in Luxembourg, and I really would like also, the organizations here to make sure that we are becoming a little bit more diversified in that respect.
No.
One last comment, because I think that is also important, is that we have a new, and a little bit in line with that particular topic, we have a new country manager in Luxembourg. She's will become responsible for BGL and the country. Her name is Beatrice Bélorgé. So I think that's a nice step, going forward. And one of the things I'm very convinced about, at least the future financial services, there will be more women, in the management positions and in top positions in financial institutions.
I couldn't agree more with you, and I know you're supported on this panel, Robert. I mean, if we're all being honest here, Robert, I mean, you came in late to the panel, if you remember, because we went out to get a female panelist.
Well,
they were all on
vacation. I put on a wig.
So thank you for filling in, even though it's against company policy. But you are filling in because we approached a series.
Okay,
so next time it will be Beatrice, I guess.
Yeah,
exactly.
Gentlemen, I'm going to ask one last quick question, and then we have a raft of questions from the audience, which I want to cover some of these. But let's try and keep this one maybe in response short. Aside from COVID and our reactions to it and how it's made us change, I mean, there is now so much uncertainty, so much happening in the world that is going to impact financial services. Brexit has kind of taken a back burner, but it's still there. Other externalities, I mean, low interest rates and the hunt for yield in the markets. I mean, we talked about tokenization, maybe giving access to new investment opportunities. You know, one of my pet favorites that some people get bored of hearing is aging and how we're all going to be living longer lives. It's natural anyway, and the impact that may have on the fund sector, particularly on the pension fund sector. If I could ask you just briefly, all of you, to just as a closing from my side, if you could give maybe one or two key things that you see happening. So if you, in your crystal ball over the next 5 years, what are the key impacts to the financial industry in your businesses? Maybe let's start with Eduardo. Eduardo, what do you see? One or two key things?
Yeah, that's an interesting question, because if you had asked it 4 or 5 months ago, the answer would have been completely different. So it makes forecasting very, very tricky these days.
Financial services, we're meant to be good at this, right? So
yeah. Well, we've been able to predict every crisis, haven't we?
Of course.
So no, joking aside, from my perspective, ESG is a trend that is going to continue to be increasing, and where before it was maybe a niche thing. It's you see investors are asking for, asset owners. We ourselves are focused in it. To Robert's point, both from a diversity perspective, but also from the buildings where we sit need to be compliant with certain rules, with certain ESG type considerations. So that for me is one that will continue to grow, and I think that one will continue to shape, I think, the future in terms of where things are going from an investment perspective, from a governance perspective. In a lot, the impact is quite large. And I'd say probably that if you think about COVID, and if you think about the environment, as I said before, COVID has been a tragic episode, a tragic crisis, but the environment has certainly benefited from it, albeit temporarily, and let's hope we can extend it much more. But there you can see already how it has forced us all to think differently. There was a comment on the chat from somebody that said, if somebody at the end of the year has the same business plan they had at the beginning of the year, then they haven't understood much. I completely agree with you. When I took the leadership team to do the 2023 strategy, it was pre-COVID. That didn't happen because then we were all then during COVID, what we had thought it was probably going to go, it went completely different. So yeah, I say for me, the biggest impact or the biggest driver that will shape our industry is going to be ESG.
Okay, Arno, your thoughts just quickly.
My conviction is that more than ever, what will need to drive our strategy, etc., is our raison d'être, and which is to actually foster the sustainable and responsible development of our economies. So that means, and this will be accelerating, no doubt, that, as said by Robert and Eduardo, we will accompany more our clients towards more sustainable, responsible developments. We will accelerate our disengagement from certain industries, etc. We will foster more circular economy, etc. What is extraordinary is that banks are really, and our financial services are really at the heart of the development of the economy, because financing is absolutely key. So I think this trend accelerating, raison d'être be more obvious than it was 10 years ago, where banking was seen as a threat. And I've been always convinced that banking is actually an opportunity to develop and to develop in a sustainable manner. Now we have obviously a lot of challenges to address. Let's be frank. It's obvious, that was the lessons from the last crisis, that we need to be less risky, because socially the risks that were taken in the preceding decades were not acceptable. And at the same time, given the interest rate environment, given all the constraints, regulatory constraints that we have, we need to make sure that we have the financial means to continue our job, and hence we need to be more profitable. So it's a complicated balance to find, but I think, and we are experiencing this on a day-to-day basis. But I think the reasons why we are here are more than ever there, if I may say so.
Yep. Okay. Thank you, Anna and Robert.
Yeah. So because I think a lot of things have been said. Otherwise, we're going to bore the people, and who's listening. But I think sustainability for me is where we really want to become there and a leader. And so I think this is where we're going to invest more in. Digitalization, we saw that also in a couple of documents that were shared, by the Big Four, that we still are, lagging behind in asset service or on digitalization. I think we need to listen to our clients more, and we can all, I think, come up with nice ideas, but in the end, our clients that are kind of driving our business. So that's where I think also we will and we need to invest more in that particular space. And I think coming back to data, which is the heart, the center of this whole story, data as the golden source, there we need to make sure that we help our clients to make sure that we enrich data, we report it in a much more easier way with our API technology, where where when you want to get the data, where you want to get the data, these kind of stuff is important. So this is I think where we heading to. And then perhaps the last part is the engagement of our people, because they're also, if we want to make that kind of transformation, we need also to make sure that we are ready for that. And it's going fast, so we need to rescale, to upscale all the people. We need to find a kind of way to bring them to that next level, and to have a motivational working place here in Luxembourg. I think we have great components there. We see it in the private capital market or private equity market, whatever you call it. There is a strong growth. There is this yield for search that you were mentioning already. So there, we need to make sure that we are helping our clients together also with all the stakeholders in this industry. I think also the regulator was already mentioned a couple of times, and I think indeed they were very pragmatic during this crisis, and they also understand that we all together need to make sure that we do it in a controlled manner. So I think that is a little bit what I foresee for the coming years.
Okay, fantastic. Thank you very much, gentlemen. I'm going to get Sebastian Gregory online here. Sebastian, I see you have many questions that you've posted. I'm going to ask you to choose one to ask the panel, please, if you don't mind.
Sure. Hi, everyone, and thanks very much for the opportunity. It was a great talk. Thanks for sharing the experience and the responses from the corporations. So many boxes open that I will choose one, well, actually two, if you don't mind. Oh. They're related.
Let's start with one, because there's some other questions. Yeah.
It's simple. It's how do we see the development of shared services now that digitalization, reviewed working processes, adjustment to regulatory frameworks, all of this has been taken into account at different speeds. Technology, of course. The old question of can we do more together rather than against each other, especially on non-competitive spaces. Is there a change to that view? That's one.
Who would like to answer that?
So I think, you know, if I understand the question well, I think I tried to give a little bit already in a kind of hint there, you know, due to the fact that platforms become open, and we are also looking for, let's say, other values and way to, you know, to make revenues, you know, in this world. I think, you know, we already working more together. If you look at for example, one of the projects that we're working on now, it's called Project Manhouse, where we are trying to, let's say, all the data is coming from everywhere. It's coming from our, you know, our competitors, where you have the custodian data, you have regulatory data, you have accounting data, you have lawyer data, you have a lot of data. So we need to find, you know, and within this open architecture, we need to work more closely together. If we talk about APIs, you know, we need to make sure that if a client has 3 different providers, you know, it cannot be the case that, you know, that we have 3 different APIs. I mean, so we need to standardize that. So that means we can only do that in a collective way. So we are working there with Swift and with other, you know, market actors to make sure that we help the industry and the clients to work closely together, and in the end with one purpose, which is helping the client. I think so that you know, that whole kind of way going forward, there is no other way than within this open architecture to work more together.
Excellent. Okay. Thank you very much for that, Robert. I'm just, in the interest of time, I'm going to jump to the next one. I see we have a question from the head of the European Payments Association, Thibaut de Barcy, also an ex-CEO of banking in Luxembourg that many of you may know. Quite a specific and interesting one. Let's get Thibaut live here to ask his question.
Thank you. Hello. Yes, it's a question particularly for Mr. Jacquemin on the credit risk in the context of the COVID crisis. I'd like to know what is his analysis in terms of client segments, private clients, small companies, large companies. Who is more at risk right now, and how can the financial industry try to cope with the situation? Asking guarantee from the state, refinance the debt, or manage bankruptcies the best way we can and restart afresh?
Well, the nature of this crisis is exceptional, of course. It's a decision for sanitary reason to actually reduce extremely significantly the activity. And this explains also the nature and the extent of the involvement of states in order to help the economy weather this crisis to a certain extent. Well, at present, I would say the biggest and immediate risk is on the corporates, the companies, and among those on the small and medium enterprises, the SMEs, and all the various state programs in each and every country are designed in order to help those stakeholders to weather as best to the best to the greatest extent this crisis. But this is where we expect the bulk of the cost of risk to materialize. Big corporates, I mean, it depends on the sectors. Some are positioned on sectors that actually are benefiting from the crisis. Some, of course, in sectors that are extremely heavily affected. I'm thinking about tourism, airways, airlines, etc., etc. At this stage, because of the magnitude of the state programs, the consequences in our European economies, the consequences on the individuals are limited. But this may change when actually we begin to really see the impact of the unemployment. Okay, but at this stage, it's I would say secondary. And I was actually quite surprised to see that the impact on the FIs is limited. And you know, one of my concerns at the very beginning of the crisis was I asked the teams to look at the situation of the hedge funds, etc., and the impacts on the FIs actually was really minimal. So effectively, as you point out rightfully, the consequences are, and the dynamic, also the cinematic of the materialization of cost of risk is very different from one client base to another.
Okay, thank you very much for that, Thibaut. Then I'd like to ask Mauro to come online, and I think this is actually quite poignant. I know Eduardo's thought about this. A question about AI and artificial intelligence. We haven't mentioned that on this call. So Mauro, please ask your question.
Thank you, Nazir. Actually, yes, we have been talking to technology, which is applied to, enhance the client-facing experience. Well, in fact, I represent a boutique which creates algorithms, and through the use of artificial intelligence, we come up with financial investment strategy for institutional clients. So I would like to see, to understand if after COVID, the skepticism that there is in this industry, in the financial industry, towards artificial intelligence will continue to be there, or there will be an acceleration like in everything else.
Yeah, it's an interesting question. I wouldn't consider myself as one of the skeptics. I actually was in discussions before the crisis on the use or the adoption, use test cases or proof of concept, whatever you want to call them, around the introduction of artificial intelligence into some of the things we do. Now, the business that we look after here is asset servicing, not asset manager. So a bit different than what you are thinking about or discussing about in terms of use of algorithms. But in our space, there's still, I think, benefit for it. It's already used in certain instances of reconciliations, use of algorithms, and I think that can be increased. But for me, also in a lot of the commercial things, that aspect of our business, when we are negotiating fees or when we are benchmarking, etc. For me, the use of artificial intelligence should be much more than what we have. The challenge that we have, depending on the businesses and on the profile of the businesses, sometimes the amount of data to crunch is not as extensive as in other areas. Your case about asset management, but even if you look at a retail bank versus the type of banking that we do, which is asset servicing, institutional business, large fund managers, etc. So for me, I challenge my team more and more when they come with problems to think about technology. And when thinking about technology, thinking about artificial intelligence, people maybe have this impression that it's something overly complicated, and I'm not saying that it's simple by any stretch of the imagination, but I think they don't push themselves to really imagine, because you need to imagine what you can do with it, and from there try to break the barriers, try to push yourself to thinking completely different from what you've been thinking, and what uses you can make of artificial intelligence. I'm hoping, I'm sure there's going to be much more adoption.
Thank you very much, Mauro. Listen, in the interest of times, I know that there are a lot of Q&As. I think some of them have been touched upon in the discussion. To others, I have to apologize due to the time constraints, and I'm picking and choosing. But given Robert's previous comments as well, we are going to finish this off with a lady asking the final question. If I could have Lucy Heavens come online, and because I thought this was quite interesting as well.
Hello, well done for giving a lady some airtime. Thank you. We've talked a lot about kind of digital transformation from a technology point of view, and I think someone mentioned this earlier, that kind of video conference and collaboration software, it's not new, it was there already. But for me, kind of what's changed actually, or the biggest impact, has been the sudden kind of willingness of every function in the company, from IT to finance, compliance, sales, whatever, to kind of all come together and kind of cut through any hurdle necessary and just make it happen. So my question is actually that in your organizations, what role has kind of culture made, or what impact do you think culture has made to your recent digitization initiatives?
That's a very good question to close on: people, culture, and how that has impacted, and how we'll move forward leveraging some of the positive benefit. Robert, maybe if you'd like to start.
Yeah, of course. Well, Sydney, indeed, very good question. So I think, going back to that people's, I mean, due to the fact that technology and also I think it's a very important element in our organization is let's say is important, and we also know that we have a lot of legacy in our company. So also during years, what happened is that the financial and especially on the asset service side, we at the custodian side, we were kind of developing a lot, in our organization, and sometimes also that we had the departments completely siloed the one to the other. That is changing. We're working now with much more with DevOps models, and teams working together. And I hate the word, mentioning agile mode, but it's, it is true that we are now kind of embedding, and I think that is the big challenge, to make sure that these, departments are most of the time culturally also understanding each other better. So that is, I think, something that we are in the process. We are definitely not there. I think the open architecture I mentioned will also kind of boost that kind of working more together. So I think culture there is incredibly important, and it's not only, let's say, from a Comex perspective, it's everywhere in the organization, starting from from the bottom to the top, and where we also need to make sure that we help our employees, because some of them, were the kind of administrative functions which will disappear now or in the near future. And I think this is where we need to be there, and to make sure that we are helping each other there. It's a big challenge, and I think this is, for me, perhaps the biggest challenge in the financial sector also for the coming years, to make sure that we go with this objective.
Arno, Eduardo, any last thoughts on that as well from your perspectives?
No, I would fully agree with Robert. It's we have to make sure that the culture evolves and is able to accompany effectively all the transformation that is enabled by the technology and by the evolution of the markets.
Yeah, and I'd say I echo all that, but I'm also positive about it. I was the one that said we had all this technology, we just weren't using it. But even if you think about it, when we started using video conferencing, not everybody switched on the camera. Now everybody switches on the camera. I think slowly we're getting there.
Listen, gentlemen, really very much appreciate your time and your insights. This has been fantastic. I'm sure the audience, or I believe the audience, such as I have, really enjoyed your insights and your comments. And you know what? I'd love to be able to do this again, actually, in another 6 months or 9 months' time. Maybe we could schedule that one in, because it'd be great to see also how things transition during this period. And I think that would be a good idea, and I'm sure Anthony can help us set this up. Thank you very much, all of you, for being part of this. We really appreciate it. Thank you to the audience for listening in. Anthony, I will let you close up. And again, thanks a lot for joining us.
Thanks, Nasia. Thank you.